It's Money Time with Dominic Alafaci. Collins House. Dominic, good morning to you.
Good morning, Darren.
Hey, the market, has it recovered a little overnight or just
Well,
up and down like a yo-yo?
Well, it's actually flattened a little bit. They had a breather from their recent rises because it went down a lot and it's come back a fair bit as they wait the outcome of peace talks in Islamabad, Pakistan later today, I think. The Dow Jones Industrial Average gave back over 0.5% to 47,917, which is still over 21% higher than it was last year. So it's still pretty good. It was 30-something. It's come down to 20 is the problem. So that's coming off an all-time high of 50,121 on the 11th of Feb. The S&P 500 was basically steady at 6,817 points, while the Nasdaq posted a modest gain, finishing the week at 22,903. But that's almost 40% higher than it was this time last year.
Yeah.
So whilst there's been a big fall, you've got to put it in perspective.
Yeah.
Across Atlantic, London's FTSE was steady and the French, German and Italian bourses basically posted healthy gains. Gold dropped $30.60 to $4,797.40 US an ounce. West Texas it fell 1.3% to $96.57 a barrel. And the A dollar is slightly lower against the greenback and is currently buying 70.64 US cents, with the ASX 200 SPY 70 points higher, suggesting a positive start to trading on Monday. We've got to find out what happens with this Islamabad talks, where our market was down on Friday 13 points to 8,961, which is still over 17% higher than it was 12 months ago.
Yeah.
So whilst things are bad, the average over the longer term is better. And I want to talk today about debt reduction strategies. I don't want you to go, if we're playing Monopoly parlances, I don't want you to go to Mayfair. I don't want you to go to jail. I want you to go to a fantastic budget planner. So if you're in the pulp, excuse my technical language.
Is that a financial term?
It is.
Yeah.
We all know the governments can't balance their budgets, but we have to. We don't have the luxury of increasing taxes like the government does. We have to balance our budgets, and with interest rates being higher and also fuel costs, you need to make sure you adjust your spending. And look, it's hard to do, but you've got to do it, otherwise you'll really be in it. Once you know where you are, so use the budget planner, speak to your lender if you're in trouble, and see if they can assist with any restructuring of your loans or if one of their hardship programs can be of benefit. That's very important. Whilst lenders are portrayed as being, greedy bees, they do have hardship provisions which can help. If you need to restructure your loans, go to collinshouse.com, send me a note, and I'll refer you to a qualified mortgage broker, because I don't do lending, I do investing.
Right.
But there's someone I know and trust that can help you. You can talk to them and hopefully they can get you out of the poo.
Right.
If you feel lost and there are a few people who are a bit overwhelmed at the moment, I would ring 1-800, you'll love this, 07007, as in James Bond.
Wow.
So 1-800-007.
Whose number's that?
That is the National Debt Helpline, but it's only open Monday to Friday, 9:30am to 5. So don't ring today because you'll get a recorded message.
Right.
So on Monday, 9:30, if you're in the pulp and you really feel you don't know where to go, they've got some financial counsellors you can speak to. It's a terrific service. They're not going to give you a pot of gold, but they're going to give you a way out, hopefully, of your mess. So
right.
If you're in a reasonable position, speak to your bank. Or if you want to refinance, speak to somebody that I know. If you're really struggling, I had a couple of calls recently like that. Don't ask me because I don't lend money. People ask me, I don't restructure loans, but the National Debt Helpline is there. It's a government
National Debt Helpline, 1-800-007-007.
Easy to remember, isn't it?
Yeah, it is very.
And I've referred a couple of people to them. I haven't referred hundreds, but the feedback has been pretty good. So please don't get cross if they hang up on you and you're not happy, but I believe that they're good people.
Okay. To Kevin, good morning.
Good morning, Dominic. I've got two questions for you quickly. I know you're a busy man. First of all, is the pension tax deductible?
The pension? The age pension?
I have to pay tax on my pension.
Yes, you do, but most people, if you don't have any other income or low income, you won't pay much tax at all. The average Australian, after the rebates, who's over 67, who receives the age pension, should not pay much tax. Does that make sense?
Thank you. Second question, mate, is I've got about 700,000 that I want to park for 3 months and I can get 4.8. Can I do better?
That's pretty good. I think the
4.8.
The best I've seen is 4.85 something. So, look, it's pretty good. May I ask you which bank, Kevin?
Great Southern.
Yeah. Look, I think that's the one I saw. Try Rabobank, R-A-B-O. Go online, have a look at them. But that sounds like a pretty good... Did you say 4.8?
4.8.
8. Yes.
4.8 for
3 months.
Yeah. Seems pretty good, but give Rabobank a look at.
Thanks, Kevin. To Peter, good morning.
Hi, Dominic. Thanks for your program. I was looking at getting a higher yield by investing in NAB investment bonds for 1 year at 7.6%. Any views on that? And can I do that by myself or do I have to go through a broker?
Okay, I smell a rat.
NAB investment bonds for 1 year at 7.6%.
Yeah, Peter, I would...
Yep.
Where are you getting this information from? The internet?
Yep.
Yeah, I'd be very cautious because there are bonds that you can buy that do have high yields on them, but they're in the secondary market. And it's not what... I don't think it's what you think you can get. I would be very cautious and seek independent advice because there are bonds that exist that have got that coupon, that 7 or 8%, whatever you said, but they're not $1. They're $1.20.
Right.
So just be very careful. And if you have any details, go to collinshouse.com, click on the Contact Me button, and I'll have a chat to you online.
7.6%, too much for 1 year. Too good to be true.
I can't say this, but I will. I think it's a scam.
Ooh. Thank you, Peter. Be careful. Monique, good morning.
Good morning, Darren and Dominic. Sorry, I've got a cold. Just a question. I've got some unexpected body corporate levies for maintenance on the building I've got an apartment in.
Yep.
And I was just wondering, what's your thoughts, rather than try and refinance my loan, my mortgage, do you reckon I could take some money out of my super?
Monique, I've got to be rude and ask your age.
Oh, 65.
Monique, you can take...
You can do anything you want with it.
Your super?
Yeah,
tax-free.
once you hit 65.
Yeah, so it's probably a good idea rather than borrowing.
Isn't that annoying when all of a sudden there's bills coming in for some work that needs to be done when you least expect it?
Yeah. So, Monique, I would, if you attain 65 years of age, you can access some or all of your super. Look for any unrestricted, non-preserved benefits or any benefits where there's... Well, you should be able to get it all out tax-free, to be honest with you. So... I'd probably look at my super fund as a source of finance.
Yeah, you wouldn't refinance, would you? What,
No.
Is it are they big bills, Monique?
Oh my gosh! Well, normally the quarterly fees are about $3,000, but now for the next couple of years, we're going to have to come up with an extra $4,000 on top of that.
What?
Every quarter.
Every quarter. What sort of places is it falling down around you?
No, it's 50 years old building. It's just got lots. It needs plumbing stacks work. It needs a new roof. Like, it's just big. It's big jobs. But once it's done, it'll be fine.
How many in the what's it called? The
complex.
building, the complex. Thank you, complex.
There's a lot of apartments, but there's probably about 40 owners. So we're dividing everything up, of course.
Yeah. So they're spending $400,000.
Some people have opted. Yeah, some people have opted to pay in full each quarter, which is what I want to do, or they've got this drawdown fund where you've got to pay 10% interest, and I'm not doing that. So I'd rather just pay it off.
Pay it off, get rid of it, out of your super, bang.
Well done, Monique.
And then you can sleep on that tontine pillow with no worries at all. Thanks, Monique. Good morning.
Good morning. I'm just retired and I have a fairly healthy super balance and I'm with Vision Super. My partner is with ESS. We've had a financial planning meeting with ESS. They recommend that I move my balance over to ESS, and they're also recommending that we open a Vanguard account. Do you have any recommendations?
Kathy, it may be the best thing to do. It may be the worst thing to do. I'll be honest with you. If a firm employs a financial planner, if a super fund employs a financial planner, there is a very good chance that the financial planner will be recommending the super fund that they work for's benefits. So,
why wouldn't you?
It's like going to a Ford dealership. You're not going to be...
go and buy the Holden across the road.
It's unlikely. So it could be that it may be the best thing. The Ford may be the best thing for you. May I inquire as to your age, Kathy, and your partner's age?
I'm 65 and my partner is 69.
Okay, well, look, because your partner may qualify for some Centrelink benefits, I'm not sure whether together you've got too many assets, but there are some innovative products that I believe neither of the two funds you're talking about have got. So there might be a third alternative. So if you'd like me to look at it for you and perhaps refer you to an advisor that doesn't work for either of those funds, I'm happy to do that. So if you just go to collinshouse.com, click on the Contact Dominic button, fill out some information, and remind me you spoke to me on the radio because I'll forget, and I'll contact you either via mail or by phone. And if I think you would be better off doing what they're saying you're doing, I'll tell you. And if I think you would be better off looking at some alternatives, I'll refer you to someone I know and trust.
Good on you, Kathy. To Mark, good morning.
Yeah, g'day, Dominic. Instead of property, mate, what's your opinion on taking a loan out for a share portfolio?
I love the idea, Mark, if it's done properly. May I inquire?
What do they call that?
Margin lending.
Margin lending.
I'm a bit of a scaredy cat. I really don't. Margin lending's okay, but I like using real estate as the asset that you borrow on and buy a small amount of shares so you don't have too much gearing problems. So I've got to ask your age, Mark, quickly because I'm running out of time.
45?
Okay, do you own your own home?
Yes.
Okay, possibly you could borrow on your home and buy a share portfolio so that if the shares fall in value, you don't have to sell them. You can hold them for the 7-year duration that you need so you can capitalise on the profits.
Thanks, Mark. Doable, you reckon, Dominic?
Doable.
Collinshouse.com is the internet address for you.
Yes.
And we will see you next week.
Looking forward to it. Hopefully Colin will have a win this time or we won't be so glum.
If we could just kick a goal.
No.
Too costly. No scoreboard pressure.
Cheers, Darren.